Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So we're seeing green arrows around the world this morning as tensions in the Ukraine ease. Our futures up a bit as we head into Jobs Friday. So Scott, how do you think we're positioned heading into jobs?
I think we're very constructive. The market digested the big gains from Tuesday on Wednesday, and now today the futures are up. I don't think the market's going to quite run away from us today ahead of Jobs Friday, but I think overall those with the macro plan staying invested are very happy, and those looking for the tactical setups as trades were rewarded the last few days, as there's been a lot of them.
Well, so why don't you show us the levels that we should be paying attention to?
Okay, well, if you look here at the chart of the SPX, you will see that to start the year we had this accelerated trend that broke to the downside, went about 5-6% lower, but then we held in like we did most of 2013. We held the 150-day moving average. From there, bounced up really strong, went sideways probably right around the old 2013 highs, and then the key was on Monday. The key on Monday, when the unrest broke out in the Ukraine, we were 20 handles lower. We held higher, held the 21-day moving average, and now we're back at historic, not just highs, we're at historic all-time highs, rewarding most investors who have a long-term plan.
That is something to say. How about the banks? Because we did see the banks participate in the rally. They had a nice breakout yesterday, which we know is good to see.
Yes, because most of America, if they want to be invested, they like names and they know the banks. And we've discussed numerous them that in order for the rally to have like a heartbeat, and typically the heartbeat of the market has to be the banks. It's very healthy. So if you look real quickly at the XLF, you will see the XLF just had a very nice, healthy 3-day breakout back above the 2013 highs.
And one we've been focusing on a lot, Bank of America. How do you think Bank of America is holding up?
Well, Bank of America, we've been talking about for over a year or two. And I think back on Bloomberg, it was at $8 when we're like, now you could get some kind of long-term plan with Bank of America. And since then, technically, Bank of America has had a really nice trend. You go all the way back multiple years, and for those that aren't really that versed in technicals, all you have to do is take a crayon and a pencil and draw a straight line, and it's been a nice trend. And that's what we talk about, trend for the past 2 years, and that's what's been going on here with Bank of America. And if you go a little actively, you'll see, back in the summertime, you had a nice breakout to the upside, consolidation, another breakout into December, and then what we were targeting here for tactical alpha meaning outer performance, all we wanted to do is see a breaking of a downtrend. Here's your downtrend. This was your day one on Tuesday. Yesterday was your follow through. So if you had a plan, and even if you used off the charts, you could have seen that boom. Could have made 4 to 5% in a name that's right around the corner from you, Bank of America, Merrill Lynch. There you are, back at 2014 highs perhaps.
Meanwhile, leaders continue to lead. Some are at highs, some are close. We had S-Fund reigniting the Chinese group, logging an 11.6% gain yesterday.
11.6% in one day? People like to make that in a year. So imagine, knowing technicals and tactics, and if you look at this name here, you'll see S-Fund, how it ignited above this little downtrend, and now it's at highs basically. So with that said, perhaps the leader that most people do know, like a Baidu, maybe that wakes up as it's wedging right here. And if this were to get above 179-ish, you could see a breakout to old highs. So maybe there's an opportunity in Baidu.
And then over in social media, we have Facebook at new highs. Do you think we'll see Facebook maybe lift the rest of the group names like LinkedIn and Twitter?
No, Facebook has been the leader hands down for the whole year. And it got a little vulnerable, it felt a little weaker because people weren't sure how to take the acquisition of WhatsApp, but then all it did is pull back to the 21-day. So if you look here at the chart, and you'll see here the 21-day holding, that was your sign that Facebook is still strong. And then yesterday had a nice gap up, and now we're back at highs. So here's your pivot, that is 71.97. So if you've been in this, the trend for Facebook also has been very, very strong, starting all the way back from this gap here when they proved that they could monetize search. And that's what happened here. And if you look going across, hasn't even really tested that. And as far as this accelerated one, it's still way intact. And you talked about LinkedIn. LinkedIn last year that was considered the leader, or right before Facebook took off, and it's been in a consolidation phase. Now you look at LinkedIn, this chart has been correcting for almost 8-9 months now. So here it held higher versus the low in February. So let's see if this could get above and break above this descending channel like you saw Bank of America do in a different sector, different arena. So it closed somewhat strong yesterday. So to me, I think that I'm involved in a little bit here. Maybe it tries to retest this trend line here and then get back in motion. Or
how about a stock like Twitter, which we have getting tight? Could that be getting ready for a breakout?
It's getting tight, and people were disappointed with the last quarter's earnings. They said their user base wasn't growing. I think that's going to happen over time. You look at the chart, though. We look for spots to get in, and to start in the beginning here in December. What a move from 40 all the way to 75, and now look at it, very tight, getting very, very, I think, in my opinion, at a crucial level here. I'd like to see this trade above 56, get above 56 with some authority, and maybe we break this descending channel / pennant to the upside.
And then on the other hand, we have some leaders that are acting well but are not at highs. Stocks like Google and Netflix, do you think we can see them get back to those highs?
Yes, and there are some pivots to watch. Just know the pivot, and if it gets above it, there could be an extra trade there. You go to Netflix, you see the chart here, above 457 for Netflix, and perhaps it can make a new high and give you a decent trade. Google also, which has been trending very strong, that just held the 21-day. Perhaps it takes out this spot, which is 1228. So I think these leaders could continue to lead. It's just a matter of a little bit more time.
And how about Tesla? Will we see Tesla continue to lead?
Tesla is working its way back. It's a pebble throw away from those highs. You look here at Tesla and you'll see, the longer it stays above this upper area of about 251, the higher the probability it takes out 260 and then continues on what has been an unbelievable move for this high valuation but very highly innovative company that has rewarded investors believing in this Elon Musk.
All right, well, let's shift the focus to ag stocks, which did perk up yesterday. CF Industries, first one back at new highs. What do you think about this one today? Is it on your radar?
This one's a little extended, but it shows that it's good that some ag names could actually make new highs. So you look at CF, you look at the chart, and there's no real setup here, but it is above highs, and it's above the 8 and 21-day moving average. It is trending. So this was in my 2014 report. If you're in it from there, congratulations.
Then would potash be a more attractive play to you then? Because yesterday we had it log about 4% gains, but this one not quite as extended.
Well, this one at least is a setup. This one you have a long channel. It's been out of play for a while. Yesterday I got involved in the virtual trade floor. Haven't been involved in this stock in a while. They saw it go green and it ignited. You look at the chart here, very nice tight pattern, and then it ignited to close near the 200-day. And now if this were to get above this peak here of 35.52, I do think that can continue.
All right, and checking in on some big names, let's talk Apple, which has been somewhat lethargic as of late. Maybe today could get going. What do you think?
It would be nice.
Right.
Just like the banks, a lot of people in America love to own Apple and figure out whether or not they can make money like a lot of people did during the past 5 to 7 years. But it's been out of play. They're trying to get some growth back. Tim Cook's trying to be innovative. We need some kind of iPhone 6, some iWatch, some thing in the car. But anyway, technically, you look at the chart, and it has to, in my opinion, take out this descending channel here and start a new trend to the upside. Here you have a high, lower high across the board, and then here you have a low in your first higher low. The question is, can it make a higher high? So first obstacle is taking back the 50-day at 536.
And what about Blackberry? If we're talking Apple, let's talk Blackberry, which of course is trying to be relevant as of late, and the stock is hanging around.
It's hanging around. I'd love to see it stay above 10, and in order for it to get better, it's got to break above, I think, 1090. Take a quick look at this chart, and you will see that here is this little double top. It did hold the 21-day. I'd like to see it hold the middle ground here, and then at some point, if it takes out this 1090-ish, it gets a better move. I still think this stock could be, $13 to $15 at some point this year, but it's got to get through this 1090 first.
Well, in summation, we actually have some exciting changes coming to the morning call lineup. Scott, would you break those down for us?
All right. Well, we have the Redler All Access report being launched on Monday. So questions, people are like, what does that mean?
Right.
All right. So what that means is if you've been on the morning note for the past year and a half, if you don't sign up for it, unfortunately, you're not going to get the morning note anymore. Okay, what this product is, it's the morning note, which is my rundown of what I'm looking at each day, what I think the market's doing, where I think the action is, with the morning call long form version, which is about a 15 to 20 minute video where we discuss and we look at the charts of most things that are on the morning note, but we give you a visual with charts, and we reinforce what the note says by actually talking and communicating. Right. A lot of people communicate different ways. Some like to read, some like to see. So combined together, that product, in my opinion, gets you prepared to approach the day. And up until Monday, it's $199 for not a month. Some people think it's for the month, they're okay with that. No, not for the month, for the year. That means, what is it, $15 a month? So hopefully we're pricing it well where you know it's an easy decision for you, and I hope to have you in the community as well. We have a private Twitter where we're going to be interacting all day long, where I could hopefully hold your hand as I go through some of the trades and you see some of the things that we're doing, and as we execute on the strategies, they'll see us do it, so it can give confidence for people to do it as well.
Right, and these resources have, of course, become an integral part of a lot of traders' routines. So in order to make sure they don't miss anything, what is the last time they have to sign up for this?
Well, I think the special is ending as it gets released on Monday, and it's $199 now, and then it'll be $299 thereafter, and then probably in 6 months from now, I hate to say, it could be a little bit more expensive than that. So don't want to say get in now, but get in now.
All right, well, with that said, happy trading, everybody. Have a great day.